Why is it restricting? Okay. Swing structures and primary and secondary trends. Okay. So swing structures and then primary and secondary trends. Let me start with swing. The swing structure is the highest and lowest point of an impulsive move. The swing structure is the highest and lowest point of an impulsive move. What does this mean? Let me illustrate with a textbook version. This means when we have price in an uptrend, which is made up of higher highs, higher lows, right? This move from this point to this point that led to the break of structure is the impulsive move. Then after price gives us an impulsive move, we get a pullback. Then from this pullback, we get another what? Another impulsive move, like this, right? Then when we break structure, we get another pullback. Then from this pullback, we get another impulsive move. Same thing goes with a downtrend. When we have lower lows, lower highs, lower lows, lower highs, lower lows, like that. From this eye is the protected one. Once it breaks this structure, this is a break of structure, right? This is the impulsive move that led to this break of structure. Then we have a pullback, then another impulsive move that led to another what? That led to another BOS. Right? This is just basically it. Now, the swing structure or the swing leg has to do with the lowest points and the highest points here of an impulsive move. So we can call this a swing low. Swing low. And this is going to be our swing high. All right, good. So this is our swing low and this is our swing high. So a swing structure is this low and this high. This single leg from this point to this point is our swing leg. Same thing goes in the downtrend. From this high to this low is our swing leg. Then when we have price, then in an uptrend, price targets swing highs. In a downtrend, price targets swing lows. All right. That is just the basic definition of swing structures. Swing high, swing low. This is just the basic definition of swing structures. Now, the next thing there is, what does this even really mean? What do we use it for? Now, this understanding swing structures is going to help you when trying to make your analysis. It's going to help your analysis easier. Why? This is simple. Swing structure serves as an area of concentration. So when you open your charts, you've seen price breakouts of these points. You are no longer working with this swing structure, you are working with this one. When you see price break structure again, yeah, you are no longer working with this one, this particular swing leg, you are working with the swing leg. Now take notes. For price to actually, for in an uptrend, for you to confirm your swing high, you need a single recipe. In a downtrend, for you to confirm your swing low, you need a single recipe. And what is that? This is where most traders fail. I don't know if you're a struggling trader here, but this might actually be one of the problems why you've been eating SL all these years. Now, let's say we have this in an uptrend. Good. This is a swing low. We can't confirm our swing high yet because this is how price is going to move. You might see price move like this. On the charts. All right. Okay, let me make it clear. This is how price will likely move on the charts. Not this smooth something. It's going to definitely move like this. Now, when price breaks structure here, and gives us this eye here. Some of you now will now have this thing at the back of your mind to start selling. It is wrong. Some of you might have this at the back of your mind to start selling at this point. Then price will later give us a new high again and keep giving us new high. So you cannot call this your swing high. You can't call this your swing high. When you have your swing low in an uptrend or your swing high in a downtrend like this, then this swing low eventually breaks structure. The only time you cannot confirm your swing high is when, as price is moving this way, price decides to break, to do what? To give us a change of character. When you have this change of character here, price taking out the previous low here, that is when you cannot confirm this as a swing high. Now take note of this. This change of character does not mean that the entire uptrend is about to change. No, it is telling you that price wants to now pull back down, that is retrace, before it will start giving us another leg upward. And now I have successfully made some of you confused. Good. Now, for you to understand what just happened here, we have to go deeper into primary and secondary trends, which is why I combine both of them together. So what are primary and secondary trends? Primary trends are the main trend of the market. If price is in an uptrend, let's say you're a swing trader, I go to like the daily time frame and I'm seeing price in an uptrend like this, right? There's going to be a secondary trend in the sense that when we go into, let's say, the 4 hours, this impulsive move that you see is not going to give us a single candle. This pullback here is not going to give us a single candlestick. No, you will likely see this move, this particular structure like this. This is how you are going to see it. You are going to see a clear downtrend on the 4 hours time frame or on the 1 hour time frame, a clear downtrend. Now, the mistake some traders make is they do not know how to like do a proper time frame analysis to tell you that the daily is bullish and this small downtrend you are seeing here is a bearish move. This small downtrend now could be just this pullback that will give us an higher low. And when price gets to this low, you will not see price do what? Change character on that 1 hour time frame, pull back, break structure, and start buying like this. Where is it buying to? This is the 1 hour time frame. It is buying to give us what? A new high. That is another break of structure here. You will now see price break structure like this. We have higher low here. We have an higher low here. This is our higher low. Same thing as this. Then from this impulsive move here, you see that broke structure. This is BOS. This impulsive move, you see that broke structure here on the daily time frame. This is what it looks like. Here, it's a clear what? It was a clear uptrend. Right? Good. Now, still on that daily time frame, price pulls back like this to give us a new high here. Remember, we are in an uptrend. Price has to protect this lows, right? So when price pulls back, it protected this low and give us a new high. But on the daily time, on the 1 hour time frame, this is how we are going to see it. We'll see price give us a new high like this, then change character. When you see this change of character, then another break of structure, everybody's mindset is BTC has changed character. It is now bearish. Yes, it is bearish, but this change of character here, you are seeing this particular change of character. Let me expand it a little bit. This particular change of character here is to confirm this swing high and to confirm that what price wants to now retrace. It is not retracing to a new low, no. It is only going to give us what? A pullback into this leg, like this. Then when price pulls back into this leg, it has to protect this low. Now, mind you, some of you now will be like, we have it in the mind that since price has already changed character here, and BTC will continue selling to you forever and ever. No, when BTC now gets to this low, to this particular low, you will not likely see it to what? Reverse. And it's going to show us that it wants to respect this low by changing character again. And it will start going up. What is it trying to do? To give us a new high. Then you see what? You see price take out the previous swing high. Then we have what? Another break of structure. This is another higher low. This is another higher low here. Then we have another higher. This is the higher high. This is the higher high. Now, this downtrend here, this downtrend seen here, when you go to your lower time frame, it might actually take days, but you'll be seeing price in a downtrend. This is the secondary structure. This is not the main structure. The main structure, the overall structure of this particular pair is bullish. It is going up. But when you go into the lower time frame, you see secondary trends like these bearish ones here. So these bearish moves should not confuse you because they can lead to just what? They are just pullbacks that is going to push price down into a level where people want to buy from. What levels are those? I think I'm just going to add this here because it's not that much. It's not that much to add. So that it can help you guys understand what I'm trying to say. Levels of premium and discounts. So this pullback are just pulling back into what? Into areas where people want to buy from. Now, where do people want to buy from? They want to buy from areas that are cheap. Cheap things. That is where they want to buy from. Because this trading, as you see now, it is a business. Yeah. You want to buy low and you want to sell high. So you are not going to see a businessman that wants to buy an iPhone. A real businessman that wants to buy an iPhone is not going to buy an iPhone when they launched immediately, because that time the price is too high. It is too expensive. When iPhone 16 came out, some people were selling for when iPhone 16 came out, some people were selling for 3 million, some were selling for 2.8, 2.5, and all that. But now you are going to see a very good one for 2 million, 1.8 million. The price is not down. So in trading, we call those kind of levels discount levels, where something is cheap. Discount. It's just like Profem's offering discount. You hear 40% discount, 50% discount. It means they are trying to cut price down when it is cheap. All right. And in sorry, and on TradingView, you can actually use a simple tool to measure premium and discount levels. Something like you can use the Gann box. And how do you measure your premium and discount level? I told you, from the swing high, from the swing low to the swing high. Remember, for you to confirm a swing high, there must be a change of character in that secondary trend. So this particular internal trend you are seeing, so this particular uptrend you are seeing, so price has to change character to tell us that what it now wants to reverse. And for it to reverse, we already have our swing high. So you take your Gann box in an uptrend, you start from this low, from the low, and you mark it what to that high. To get your discount, you need price to trade below 50% of this swing leg. This is your swing leg from this low to this high. In a downtrend, we have from this high to this low. In a downtrend, we could have this. Then price came back here, tapped on this low, then start giving us a new one. And we have a change of character here. Something like this. Let me just stop here. Then in a downtrend, we could have this. This change of character now confirms our swing low. So we have swing high. Okay, this is a break of structure. We have swing high, and we have swing low, right? So you can just, in a downtrend, you mark it from the uptrend, from the high, sorry, you mark it from the high down to the low, like this. Now, to get your discount levels, to get your premium and discount levels here, in an uptrend, you want to buy when it is what? Cheap. You want to buy at discounts. Then in a downtrend, you want to sell at premium. You want to sell when it is expensive. Let's say you bought something at 2,000. Then you see price rose to like 3,000 or 4,000 from this point. So rose to like 3,000 or 4,000, you want to sell. So to get this accurately, you can use your Gann box tool. Some people can use their Fibonacci tool. I mostly use Gann box. This middle line here kind of signifies 50% of this swing leg. So we need price to do what? Trade below 50% before we can now start looking for buying opportunities. Here, we need price to trade above 50% before we can start doing what? Looking for selling opportunities. So when we now see price above 50%, we can now start looking for point of interest to trade. That is, we'll now start looking for our strategy. All those ones is later. All right. So when we see price pull back into 50%, that is when we'll now start looking for our strategies to enter with. So, but have it in mind that if you want to sell, whatever it is you want to sell, make sure you sell when it is high. And for you to know when it is high, you mark your swing leg. This is it, from this high to this low. Then wait for price to trade above this middle line, above this 50% level here, before you now start looking for ways to sell. So when price breaks structure, wait for price to pull back at least 50% and above. Any price that does not pull back above 50% is an incomplete pullback. That pullback is not complete. And I don't really advise people to do what? To buy or sell from those kind of situations, because whenever price comes back, price can use those incomplete pullbacks as trap. You'll understand this later in the future. I just decided to mention it. But have it in mind, as a newbie trader, you want to buy when something is cheap, when price is cheap, and you want to sell when it is expensive. Now, how do you know when something is cheap? It's simple. Open your chart, you see a break of structure, you mark your swing level, your swing low, and your swing high. To confirm this swing high, make sure the swing high has already changed character. That is when you're not going to confirm this is a swing high. If it does not change character, it can keep going up and keep going up. All you have to do is what? Keep following the trend. Don't worry, you will learn how to do that. You can keep going up. But once you see a break of structure, it is already too expensive. You need to wait. That's why they said trading is like 20% strategy, 80% waiting. Once you've seen price broke structure, sometimes all you have to do is wait for price to retrace and give you another opportunity to buy. Because when it breaks structure, it is basically above this 50% level. So it is already a premium. It is already expensive. It could go higher, but it is already kind of too expensive for you to get into it. We are all businessmen here. The best way to make money, the best way to make profits is to buy something at a cheaper price and sell at an expensive price. That is the best way to make money. I don't want to be buying gold when gold just touched 3,000. It is currently at 2,918. I don't want to be buying gold at 3,000. At that 3,000, it is very, very expensive. Even currently, it is very, very expensive because the thing just pushed up. So I need to wait for an opportunity, and that opportunity is what we call these pullbacks. And these pullbacks now gives us that opportunity to know when to enter. Then when price is pulling back, you have to wait for price to pull back to at least 50% of this swing leg, this particular swing leg, at least 50% of it, before you can now start looking for ways to enter. Because below 50% of it is more like telling us that the price is now cheap. The lower, the better. It's now telling us that what price is now cheap. Same thing here. If I want to sell, I need price to pull back to at least 50% above this swing leg. Retrace to at least 50% of this swing leg. That is when I will now decide to sell. Because if it doesn't go above this 50%, I think it is still very, very cheap. I need it to be expensive. Go above this 50%, and I'll now start looking for ways to sell. That's just the concept between premium and discount. Then back to primary and secondary trends. This particular trend you see here, this particular one you see here, is what we call a secondary trend. Sometimes you can call it an internal trend. This particular downtrend you see here is also what an internal trend. You can see this break of structure, multiple break of structure to the downside. This does not mean that this pair is bearish. In fact, the pair is bullish, but this is a pullback into discount levels, into cheaper levels, so that the big men that has billions of dollars can buy. Because you are not going to see a big man that wants to dump, or the big banks that wants to dump billions in the market. You won't see them buy at premium. Premium is too expensive for them, and they're not going to make a lot of profits. But when prices are discounts, they are ready to pump a lot of money and make a lot of profit from it. So when we have this change of character here, that is the only time we can confirm our swing high. Without this change of character, we can't confirm a swing high. Without this change of character, we can't confirm a swing low in a downtrend. We have to wait for price to change this character. And this change of character is only telling us that what price wants to pull back to at least 50% before it continues moving. And when it pulls back to at least 50%, we can now do what? We can now wait for another change of character. This change of character is not telling us that price wants to reverse from this downtrend to an uptrend. And the uptrend is going to be targeting above the previous high. Why is it targeting above the previous high? Because automatically we have been in an uptrend all along, where the highs are the targets. So when this change of character happens, you can now start targeting above this previous high, above this previous swing high. In a downtrend, you start targeting below the previous swing low. It is just that simple. So these are secondary trends. But the primary trend of this particular structure here is this. And it's showing you that what it is bullish. So maybe you might meet price around here. You might meet price around here when it has not gone down, and you see price change character like this and it starts going down, and you'll be like, gold is good, or BTC is bearish. Then you'll be looking, then you will not sell from this point, expecting price to take out this previous strong low. Zoom out of that lower time frame that you're at, and you are going to see that this previous strong low is actually like this, and price just got here and it is about to reverse. And that is why some of you is going to eat SL. So you take note of this, rewatch this video again. Now let's go to the live chat and see how we can identify these things on the live charts very, very well. Let's go to the live charts. Let me use gold this time. Let me use gold. Give me a moment, please. Now, this is good. On let me do daily. Let's see. Start the flowers. Let's start the flowers. So it's going to become clear. Now this is good on the 4 hours time frame. Right. Okay. Now let's start here, so you can actually see what I mean clearly. This is the first one. Funny enough, all these swing structures you see here, I think I got about 80% of them, and I actually called them live. I think I did. This one was in 2024, yeah. I think I caught this one too. So let's start with this swing leg. I don't want to start going too far below. Let's just start here to this one. This is 2024 price action. Now from this low, so you understand. Let me zoom. When you look at this structure, we have this low here and we have this new high. Watch. This is our swing low. This was the lowest point. This is our swing low. It was in an uptrend already. As you can see, it was in an uptrend. So have it in mind that the highs are the target right now and lows are protected. So this low went on to break structure. This was the previous high. And see, there was a break of structure here. Right? Good. Now, we can't confirm this as our swing high until we see price change character by taking out the secondary trend, the last low in the secondary trend. Now, looking inside here, you are going to see price. I told you guys, price is not just going to move like this. right? This is how you are likely going to see price. But take note of the last highs and the last lows. That is the trend. So anything you found inside that break of structure, anything you found inside that swing leg is what we call the secondary trend or the internal trend, anyone. So this is how price is going to move like this, right? So to confirm our swing high in this case, we need price to take out the previous low, this one, not the previous major low. When price take out the previous major low, that is an entire structural change on its own. That is an entire change of character on its own. Right now, we are talking about what? A particular swing position. So we need price to take out this previous low by changing character, then pull back into cheaper prices, discount levels. Before what? Before we now see a new high. And that is how price is going to be moving to come back again, do the same thing again. All right, good. Now look at here, we have our low. To confirm this our swing guy, you can see price take out this previous low, right? Now your mindset should be, we are in an uptrend, I need to be buying. Where most traders get burnt is when we're in an uptrend, I need to be buying. Well, it just went high, I know it's going to pull back, let me see if I can cash entry and follow price and come back down. Stop following price. Wait for price. If you are not that good, no need to follow price. With time, you will gradually now start seeing or start spotting some repeated patterns that can now help you easily follow price. That is with time, as long as you are practicing constantly. But don't just be like, hey, it has given us a new swing guy, and it has changed character. Price will just sell immediately. Let me run a short. We're in an uptrend. All you have to be doing is buying. For now, all you need to be doing is buying. The more I let you guys in on more information about trading, you can now see ways you can actually catch reversals by yourself. But for now, your mindset should be, okay, well, this is an uptrend. Let me buy. So as I was saying, we saw this change of character here to confirm our swing high. Now, one important thing about swing legs that I told you guys is that it is going to help you in understanding, it's going to help you with concentration, which means it's going to help you in understanding where to look when you want to trade. So now, if I open my chart and I see a swing low, and I see the change of character and I got my swing high, everything that's happening here is none of my business for now. This is where I want to trade. This is where I want to take my trade from, between this swing low and this swing high. That is where I want to trade. That is where I'm going to focus on. That is where I'm going to be looking for what entries. Now, inside here, I can now go down to the lower time frame for my entry, something like that. I can't go down here because the charts, it's way behind. When we get to that up, I'll try and see if I can go back to the lower time frames. So you've seen it, right? We'll confirm our swing high. Like I said, you wait. So what are you waiting for? You are waiting for price to come into cheaper levels, discount levels before you buy. You take your gambus and you measure. Let's say price has not gotten to discount levels yet. You wait. Take your gambus, measure from the low to the high. Below this line is 50%. Above this line is 50%, right? Above this line is premium. Below this line is discount. You wait for price to come into discount levels. Then you now, that is when, it's not that when it comes into discount levels, you now start buying immediately. No. When it comes into discount levels, that is now when you can now start looking for the strategy you trade. Is it whatever it is at all? Whether it's in fair value gap or whether it's other block, whatever it is when price gets into discount level, that is when you now start looking for it. Okay, let's continue. So we saw price pull back down. Remember, we're in an uptrend. The lows are protected. The highs are targeted. So price came back to this level, as you can see, protected these lows, protected the low. And I told you, if price wants to change, if price wants to respect a position, it has to do what? Change character. All right. So right here, we have a change of character here. I remember this question somebody asked me. Why did I consider something like this a change of character when this high did not give us a new low? then I do not consider one. There's another one again in math, another change of character. It is simple. This I is a complete pullback. I told you a complete pullback is when price did what? Is when price retraced from, is when price pull back from an area to what 50% leg of that particular swing move. This here right here, from this low, from this high, sorry, to this low, is another swing leg. Let's say in the 15 minutes time frame, something like that. We are, this particular one is an internal structure, right? This is a downtrend. You saw this break of structure here. Then price pulled back from this point up to this point here. Let's measure it. Let me be sure of what I'm saying so that I'm not going to be saying. You can see price pulled back from this point to a discount leg, to a premium leg, sorry. So some people that wanted to even sell from this point, some people that wanted to sell from this point, their sale could be valid. Why? Price was put into a premium level. So this pullback you see is a complete one. An incomplete one is when the pullback does not get to the 50%. Let's just say it stops like here, didn't get to the 50%. But since this is an internal structure here, this downtrend, you measure from the high down to the low. You get your pullback, this pullback into premium level. So this particular pullback, was a complete one. And people that were selling from here were hoping that price is going to do what? Give us a new low. But the only reason why price did not give us a new low is because we are already at a strong level, a strong structural low, a strong swing low. When an uptrend, the swing lows are the strong ones. We target the swing highs. Don't forget. So because we're already at the strong swing lows, instead of price to now give us a new low, it reversed and took out that previous low. This is now a change of character. This change of character is now telling us that price wants to change from this downtrend. Remember, price changed this character, changing from this uptrend to a downtrend, telling us that it wants to pull back into discount levels. And I told you, when price does something like that, and gets to that strong levels, for us to now know that price wants to respect this level, we need to see another change of character. And here, price gave us another change of character. Now, this change of character is now telling us that price wants to reverse from this downtrend to an uptrend. This downtrend is a secondary trend. The entire pair is not bearish. It is not going down. This was just a pullback into discount levels. Don't forget, a pullback into discount levels. Look at it. Swing low and swing high. You see the pullback into discount levels. We have our change of character. To confirm this change of character, we had another break of structure. This is one of the simplest price action. Could not even believe that period last year, some people were losing to gold when this was like this. Gold was so simple that last year that even a baby can just wake up and trade it. That was how simple gold was. So we have a break of structure here. Oh, sorry, break of structure. BOS. So we have this break of structure here. And as you can see, price was giving us break of structure. Another one. We have another one here. And I told you guys, when price got into discount, since we are in an uptrend, the eyes are the targets. We are targeting the previous swing high. And you saw price take out the previous swing high. Targeting this previous swing high is to give us a new swing high. So this is the last swing high, and you can see price. There was a time I typed SH on my chart. Somebody was like, what does SH mean? It's just a simple string. It's swing high. SL, swing low. So you see price take it out. Now price has taken out this previous swing high. I have no business with this anymore, with this swing leg anymore. This is where my concentration is. And what am I looking at? I'm looking to see if this is going to be my swing high. And how do I do that? Price has to take out one of these lows, this previous low, change of character here. Has happened. Then this confirms our new swing high. And this confirms our new swing low. This is the lowest point. Right? Good. So this is my new trading model. This is my new trading area. Sorry. This is the range I want to start trading from. this new trading range between this low and this high. I'm done with this. Price has already broken structure to the upside. So we are done with this. We have no business with this again. Then what do we now want to do? We've seen our we've seen our change of character here, right? Next thing, you mark out from this low. From this low. Remember, we are still in an uptrend. We want to be buying from when it is cheap. We bought from when it is cheap here. We should try and make sure we buy from when it is cheap here again. So from this low, we're targeting this high. We measure this high. So we need price to come down to at least 50% of this leg here. 50%. That's the middle of it. Some of you that you can go to your charts. This is my FIB setting, my Gambos setting, sorry. I close some of all these 0.5, 0.75, whatever. I only make sure it's just the 50% I share because that's only what I use it for. I will screenshot it later and send to you guys. So as you can see, price change character. Broke structure. Here. Again, the uninformed traders will now think that what's it called? They will not think that gold has changed character, broke structure. Hey, we are not in a downtrend. Price might actually come back and take out all these lows. You will now start seeing them marking long thing and saying liquidity. It's a simple market structure for you to understand. The overall trend is still bullish. This change of character here does not mean the overall trend has changed. No, this only means that price wants to pull back from this high down to a discount level before we get a new high. Now, after this change of character, we got this break of structure and price tapped into what? Price tapped into discount levels. Watch. You see price taps into discount levels here. After tapping into discount level, what happened? It took out this previous high. Automatically, that tells us what? That gives us a change of character too. And this change of character is not telling us that from this downtrend, price has already changed back to an uptrend immediately. There is no time. And after the change of character, price pulled back, broke structure here, came back and broke structure to confirm the change of trend, broke the structure, and at the same time broke the previous swing high. As you can see, in this case, we are actually done with this second swing leg. This is the swing leg from this low to this high, from this low to this high. That is the swing leg. So in this case, we're actually done with this second swing leg. This is the next one we should be looking at. This swing low here. This is the next one we should be looking at. This swing low, and we should be waiting for what? A change of character to confirm our swing high. So we saw this particular one here. So we can confirm this swing high and wait for price to pull back. For price to pull back into discount levels. And you see, okay, price did not pull back into this one. We do what? We wait for another opportunity. Like I said, you don't own the markets. We've seen 1, 2, 3 happened. The fourth one, price did not pull back. So sometimes it's not going to, it's not, nothing is 100%, all right? It happened here, it happened here, it happened here. That's like 3. So price did not pull back in this case. So we move on to what? We move on to the next one. Now let's see. This was the base that led to this one. Let's see. Okay. This was the base that led to this one. This is the last low. Yeah. This was not a change of character. So any person that is like, and this is a break of structure. This is a change of character. Let's see if price will pull back. You will get burnt. This is not a change of character. It was just a sweep of this particular low. Price kept going up. So if I'm even to mark the swing here, I'm going to be marking from this point. I'm going to be marking from this point to this high. Think. Because this is where I saw a clear what's it called? To this particular high here. This is the next area, something like that happened. Then we can easily mark from this low to this high. Easily mark from this low to this high. And we can identify this change of character here. Now, before we continue, some of you will be like, why am I ignoring this change of character? This change of character is coming from an incomplete pullback. So that is not my swing guy. I told you guys when I was showing you the textbook version, I told you guys something. Once it is an incomplete pullback, price will later come back and take it. So if I was to do change of character here, then mark this place as my swing high, like this. Like I said, the banks, the hedge funds, Wall Street, all of them, you will not see them buy at premium. Sometimes they are going to use their own money to force prices down into discount levels before pumping it again. So there is no way you are going to see them buy when price is cheap. This is it. After this change of character, price moved. Okay, let's see. From this low to this high here. Price did not come back into discount. Kevin is not going to engage in this type of markets. If price has come back into discount, then this is going to be our new swing low. This particular low here. But price did not come back into discount before giving us this new high. Then after this high, we saw this change of character. And after that change of character, look at it. Look at that previous low that you would have taken, the incomplete pullback. You see how price came back and take it out. I told you, well, in the future, you will know why it is a trap. It's something we call inducement. Yeah, these are areas of traps, area of liquidity. Later you understand better. So since this particular low did not come back into discount levels, I will not engage this. Why? My business mindset tells me that what if I want to buy, let me make sure I'm buying at discount level. Let me make sure I'm buying at cheaper prices. And the way I measure my cheaper prices on the chart is by using this gun box. I measure from this low to the previous high, to the new high, right? In a downtrend, I measure from an high to a new low. That is how I get my premium and discount levels. So I need this particular price to pull back into discount levels before I can buy. If it doesn't, then I can't buy. So I move this one to this. So I measure this particular one that changed character and price pull back into discount levels. This is now when I cannot decide to buy. This is now when I cannot decide to do what? I cannot decide to buy. After price change character, we see price broke structure here. We saw price broke this structure here. Then went ahead. Then price came back down into discount levels. The cheaper prices I've been telling you guys. Then came back up to take out this previous high. Look at it, taking out this previous high. This confirms a change of character for us. And after this change of character, we still need price to pull back into discount and break structure. So you see price pulled back into discounts and finally came back to break structure again. Yeah, you can see. Then what happened? The swing guy that was the target has been taken out like this. And that is practically how it's done. So currently we have this leg. Currently we have this level right here. We have this low. And gold just gave us this high recently. This is an overall swing structure. And gold just gave us this high recently. Why did you just confirm this swing guy? We just confirmed it with price taking out this low. So in case you start seeing gold selling, don't be like, hey, gold is already overall bearish or something. Gold can just sell into premium, into discount levels. It could be from this point, watch. Gold can just sell to around this point, say 2,700 or so, and start buying. Yeah. So that is just how price moves. All right. This particular change of character does not mean gold is overall bearish. This is just the secondary structure. If we zoom out, you are still going to see this is like the 4 hours time frame, right? You can see this uptrend, how smooth it is. You can see how this smooth this uptrend is, and you can see the change of character right here. Now go to the daily time frame. We are going to see that gold is the overall and what's it called? Bullish. This is what it looks like on the daily charts. Now this was the last daily low. Let me remove all these things. You can see it now clearly. So it's the last daily break of structure. So don't be surprised if price actually just pulls back into discount levels here. Just pull back into discount level and buy. So that long uptrend you are seeing on the 4 hours time frame, this is it. It's just one move to the upside. And that is how you understand your primary and secondary structures. On Friday, okay, today is Wednesday, right? On Friday, we are going to be doing a recap of yesterday's work and today's work. Then you bring all your questions together. But between now and Friday, you are going to do these assignments. Let me see some of you guys that have done what that have catch up. Let's see. What's the assignment going to be like? It's not going to be that hard anyway. It's not going to be a very hard one. But let's start with assignments. And please take notes. All these things I'm just telling you guys are just concepts. Yeah, it's just like, I want to take you guys are like farmers now. I want to take you guys to my farmland to work. I'm giving you guys cutlass, tools, hoes, and everything. I'm yet to show you guys where to work. So all these things are concepts that I want you to understand. Combining all of them together will not help you trade better. These things cannot be traded alone. These things are tools. Just like you're going to war, I'll give you gun, I'll give you grenade, I'll give you bullet, I'll give you knife. These are things you are going to use on the battleground. It is not the main battle. When we get to the battle, you are not going to know if you are going to use your gun, or you are going to use your knife, or you are going to be using grenade. That is what these concepts are. So you need to grasp this concept, understand this concept all these concepts very well, individually. Nobody told you that trading was easy. So let's get right into it. So the assignment should be. Did I give you guys an assignment yesterday? I don't think I did. Did I give you guys an assignment yesterday? Okay, I didn't. Somebody said my head don't the hot. Calm down, no. Hmm. We've not even entered liquidity at all. Your head is very hot. That is the thing about trading. As long as okay, look at the drama that is happening online now. First, let me stop this recording so it doesn't enter all the steps. Let me type the assignments. Okay. Okay. Number one, I'm combining both yesterday's assignments with today's assignment. Mark out or draw a proper trend line on any pair or your choice. Now, this could be an uptrend or a downtrend, anyone. On any pair of your choice, it could be on Forex, it could be on crypto. Draw a proper trend line, any time frame. It could be 15 minutes. Just go there. All I want to see is um what I want to see there is this. I want to see something like let me use this as an example. Don't use my example as assignment though, please. Okay. trend line. I look at this and I'm like, okay, start from here. Now was the consolidation. I need to see that proper trend line on the weeks of that particular thing. This is a proper trend line, right? Then you come under and tell me up trend line. This is what I want to see. Just draw the trend line. It doesn't matter if it has broken out and retested before or if it has moved well. Just identify the trend line. So it could even be a downtrend. Let me see. Uh, I think this is another trend line here. This is another one. Very easy. It's not that hard to spot trend lines. Let's see from these points. Connect the first two dots. Here's another trend line. You spot it. I think there's another one too. Let me see. No, this one was not well this thing. Let's see this downtrend around here. This is the 1 hour time frame. Okay. This is a clear downtrend line. Price broke out here. Although this is an internal structure, so I don't really I won't really give this a go anyway. It is an internal structure, but yeah, it's a trend line. Breakout, we tested. So draw a proper trend line. There's the assignments. So draw a proper trend line on any pair of your choice. That is one. Two. Spot an area where price broke out of a trend line and retested. 3. Identify swing structure and mark out a swing high and swing low. Sorry, not just any swing structure. Identify a bearish swing structure because what we talked about today was a bullish swing structure, right? So I'm pretty sure you can use what I taught you guys now to identify a bearish swing structure. To identify a bearish swing structure and mark out its swing high and swing low, comma, then mark out its premium and discount levels. The market is premium and discount levels. So just these three assignments only. It's not so much. I think this is going to help me understand those that are following up and those that are not following up. Don't worry, on Friday, we do a wrap up of these things. We'll do a wrap up of these things. But first, this assignment is very important to be able to evaluate what we have been talking about. Because all these things we are saying so are like the foundation of technical analysis. This is still foundation. We are still laying blocks. So identify a bearish swing structure. Since we've done bullish, what I mean by a bearish swing structure, I need something like okay, let me take a picture of this because I'll drop it on the group. Okay, so now let's say look for a bearish this thing. Which pair has been bearish since USD I think. Okay, USD has been bearish. So identify a bearish swing leg, a bearish swing structure. Okay, so let me go down to let me use the file. Although it is clear here, but let me use the firewalls. You can use the firewalls time frame, you can use the 1 hour time frame, anyone. So looking at this particular one here, this USD according to the charts right here, it has been bearish, right? So when I say identify a bearish swing structure, all I need you to do is just come here, swing guy. Sorry, this is the swing guy, right? Don't just draw lines. Tell me it is the swing guy so that we know you know what you are doing. Swing guy. How did you confirm the swing low? There was a change of character. So we have swing low. This is all I need you to do. We have what? Swing low. Good. Then you take your gun box, you mark it from the eye. If bearish, you measure from the eye to the low. If it's bullish, you measure from the low to the eye. This is just it. Premium level, discount level. If possible, so type it out so that I'm going to see it. Come here beside it, type premium. And come here and type discounts. This is a downtrend. We want to be buying when price is expensive at premium price, and we want to be selling. We want to be selling when price is expensive at premium price, and we want to be buying when price is cheap at discount levels. That is just how it is. Simple business. It is not just trading. Every single business, whether it is rice or whether it is shoe, any business you are doing, you want to buy cheap and sell expensive. That is just the simple thing. This chart now helps us identify areas that are cheap and areas that are expensive. Simple. So this is what I want you to do on the assignment. Now, some of you will be like, trading is hard. No one said it was easy. And I did not lie to you guys that it was easy. I always told that so that I can know how to find. It's called the Gann box tool. The Gann box tool. Look at it. You can go to these indicators here and type Gann box. Gann. Gann box. You see it here? Gann box tool. Then when you type it, I think it's going to come out with many colors. Or you can just come to this point. You don't even need to go to any indicator. Just come to this area where you have Fibonacci, whatever, you are going to see it below here, Gann box, right? You are going to see it below here. So you can use my own settings because it's going to come out with multiple settings. You can use my own settings to do your own, for easy comprehension. Be able to comprehend it easily. Let me just screenshot these settings for you guys as well. So like I said, I never told you guys trading was easy. You are going to see top traders in this space with a whole lot of lifestyle. There are two people with two different lifestyle.